Alright, hope everyone's doing well. So right now I'm looking at this is the Great British Pound versus the dollar. And in this video, what I'm going to do is really just review what's going on right now, in my opinion. So without further ado, let's get to it. Alright, so looking at daily chart, 4-bar tight trading range right here. So possibly close to the low of the day and may have some sort of inside day, which means if that's the case, we're not far from the low. Weekly chart, today's a Friday, so weekly support and resistance is important. Traders want price to close up here, which would be about it would just well it's actually quite a bit of ways up. Anyways, 1 second. Alright, sorry about that. So anyways, looking at a 60-minute chart, you can see we're fairly close to support and resistance. We have this obvious low, which is at 78. And by the way, when I give forex prices, I usually just say the last two pips, not including the fractional pips. So when I say 78, the real price is 1.3878. Right now, price is at 91, so not far. A little less than 20 pips away. I'm not sure if we'll get there. I think we will, but we may have a deep pullback first. So, anyways, big trading range, big up, big down, big up, big down, probably sideways. Monthly chart tight channel. Let's see what else is still left. So I don't know. I think we'll try and bottom around this low. I don't think we'll get down to here, but we might. All right. 5-minute chart. Probably always in short over here. Spike channel. This was probably arguably the start of the European session. So spike, deep pullback, and we tried to get a double bottom. Went for a measure move down. You can see a measuring gap from this high to this low takes you exactly to these lows. So I think, we had a breakout point here, gap closed. This looks like a leg in a trading range, so I don't think we're going to go much further down than where we already are. Maybe we just go slightly below, again, this low, which is 78. But we will see. I'm actually sorry. I'm just one thing when I quickly switch charts like that. I'm looking to see if there's if the market has quote unquote opened or if the session has opened. Obviously, the market's open, but for example, the dollar yen is in a very small range, so the session has not started in this market. Great British Pound, obviously, the session has started. There is decent movement. Euro dollar, decent movement again, but it's still a fairly tight range, so I'm less interested in it. Anyways, I'm actually short right now, and I'm deciding whether or not it's worth it being short this low. The channel's tight, which makes me feel better about it. However, I don't necessarily want to be short at these lows. I think another thing I forgot to mention, I was looking at earlier, I think we'll get down to this low. Reason I think we'll get down to this low is big bar looks like exhaustion, and we clearly failed to get a measured move up, which makes me think we'll at least try and test the low of the bar. And again, the channel is fairly tight, so the first reversal up should fail. One thing to also note and consider is, so we have, so here is, let me get rid of a few things first. Here is a big, arguably the market clearly became always in short on this bear breakout and this follow through. So you always have to think breakout and follow through. Probably will get some sort of measured move down of that. I actually can't even see where it is. Here we go. So we're pretty much at that target as well. So there's obvious support where we're at. You know, it's good. It's a good thing. The bears are below all of these lows to the left. However, in the grand scheme of things on the 15-minute chart, you know, it's just a big trading range. So we had a big rally, sold off, big sell-off, deep pullback. So, you know, again, I think we're going to go a little bit lower, but I'm not sure how much lower. I'll put these lines. I don't expect, well, I'll draw both of them, but I don't expect us to go below both. So, you know, another thing to think about, possible second leg trap, leg one, pullback, leg two, or maybe leg one, pullback, leg two. We tried, so the first target is always the low of the exhaustion bar, or the exhaustion, the low of the leg of the exhaustive move. The next target is a measured move down, which takes you exactly to this low. So for me, I will probably look to exit down here if I don't before then. So what would make me exit? Well, you know, maybe a bull bar, second entry buy at the bottom of this range. That may be enough. I may here and there pause the video to think over some things. So if there is a pause, that may be me as well. I'm also, my computer still may have an issue with the recording software, and if there is, I apologize. Please just mention that in the comments, and I'll try and fix it if I can, or find a solution. All right, Bull's trying to get a second entry buy. I'd like to see if I can get the seconds to show up. That'd be nice. I'm not quite sure how to do that. 30 seconds left in the bar. And on a side note, one of the reasons why, you know, I know less people trade volume charts with forex, obviously. Other I prefer a time chart because it's easier to anticipate when closes are going to happen, and it keeps everything kind of the same. So, okay, not a strong enough second entry buy for me to be willing to buy above it. I'll probably just hold short, stop. Actually, stop somewhere up here. I do not at all anticipate. I do not at all anticipate my stop getting hit, which is up here. It's just a stop. It's a wide enough stop to allow me to think. But yeah, anyways, going back to, for example, the spider. It becomes really difficult to anticipate when things are going to happen because if you're using a volume chart, we've had some crazy volume and crazy range, so it's going to skew everything. Everything's going to be faster, and I want everything to be in intervals. So if I'm looking at a 5 minute chart, I want to be able to click on my, look at my clock, and typically I have a second hand on trade station, but I just have it minimized because I don't need it. Because I don't need it at this second. But I prefer time charts. It's easier to see everything. It's easier to anticipate everything. And I can just, if I want to look at some higher time frame, here's a 60-minute chart. So strong sell-off, first reversal up fails, and new low. So I hope that makes sense. So really, with all that said, this this trade could take a little bit of time, so I don't want to obviously keep waiting. And part of the reason why I'm holding is, look at a 60-minute chart. Well, let me go to like a, here's a 30-minute, here's a 15-minute chart. There's just, the bulls have not had any really decent stop entry buy, which makes me think that worst case we'll have to go sideways for a little bit, and it's almost like a small pullback trend. So that gives me a little more comfort, if you will, in staying short. So far, it doesn't appear like the bulls are doing enough to reverse the market. Anyways, I want to give my 2 cents on what's going on with the U.S. markets. So right now the spider is about 260. So it looks like right now for the pre-market we're right around here somewhere. Now overall, and this is just the spider chart, but it works the exact same for, it's a representation of the E-mini daily chart. First, let's look at a weekly chart. Look, incredible sell-off. It's really fascinating. We hadn't touched the moving average in ever since here, technically. Maybe we did right here, maybe. And you can see even right here, it looks like we touched it, but this moving average, which is just a 20-period moving average, again, doesn't matter which one you use. Moving average is at 241.69. The low of this bar was 241.83. Did not touch it. So if we want to count, arguably, $63 bars, 64 bars, depending on how you count it, without touching the moving average. That is crazy. And you just, that maybe has happened 3 times, 4 times, if that. So again, very climactic, very overbought, and that is just not sustainable. And look what happened. We quickly went to the moving average. And it's no shock. Monthly chart, just way, way, way too many bull bars. Sorry about that. So I've still got to keep an eye on what I'm doing with the Great British Pound. Let me go back to the monthly chart. So anyways, just way too climactic, and it's not sustainable. But again, this is normal. Price is just trying to figure out what it wants to do. Do we, right here, basically this is a 10% correction from the high to low, which is kind of the minimum. So the market's deciding, is this good enough, or do we need to go lower and maybe even get a 20%? Let me go to the Dow Jones Industrial Average. Again, do we need something like this, or something down to here? Probably not. There's a chance though, but again, not likely. So right now the market is probing. Where is the bottom? It's somewhere. I mean, just ask yourself: are we really going to fall all the way down to here? Maybe 20% chance that we do. 30% chance. Probably not even 30% chance. But what people have to realize, and what you have to realize, is the risk is real, and it is always a possibility. But I don't think we will. I still think there is the. I mean, you have to understand we could easily get some sort of spike channel. I don't think we'll get a second leg down here, but it's certainly possible. So we had a sell-off, deep pullback, start of the channel, and then two more pushes down. We could easily get that. By the way, it looks like the dollar yen starting to pick up, and I have to say I'm becoming more interested in focusing on this market. And one of the reasons for that is I I typically gravitate towards the dollar yen. It's just I like that market. Probably my favorite markets. I mean, the main four favorite markets I have would be the dollar yen, Great British Pound, the Canadian dollar, and the Euro dollar. Uh, Again, typically won't look at them all at one time, but those would be probably my four favorite. All right, I just got out, made a few pips. I'd like to sell higher. I really, and I'll explain why. I mean, there really is. We just keep trying to break below this low. Keep trying, failing, trying, and trying, reversed up. So, again, I'd rather sell a pullback. I think, I don't like to hold on these tight channels. And again, I may miss the move. That's fine. I'll look for, I'll look to either sell some sort of pullback or trade a different market. So that's okay with me. It wasn't, I got in somewhere during this bar and I wanted price to go down rather quickly. And really, my problem is what I was saying earlier: spike, pullback, channel. So channel usually evolves into a trading range, and these bars are good, but they're not that impressive. They look like trading range bars. Close around its midpoint, doji. Decent close, but couldn't close below here. Big bull bar, bear bar, bull bar, bear bars, dojis, bull bar. So I think I can sell higher, which is why I got out. Now I'm looking at the dollar yen. So possible second leg trap. So leg one, pull back, second leg. Strong enough breakout, I think we'll get a second leg down. So I'm going to take a second to look over. Here's a 60-minute chart of the dollar yen. So, looks like a big trading range, and we're in the middle. So selling is not as high probability as you think it is. Kind of seeing a few things really. So not far from 50%. Obviously, it's right here. Spike, possible final flag, second leg up. We're coming back into these lows. The bears want a measuring gap. I would prefer to see another bear bar closing down here. And really, another reason why I got out of this trade, the pound versus the dollar, is, yes, we have not touched the moving average in many bars, but I don't think, again, this is a tight channel, so I could be completely wrong by getting out. And I may have, in fact, just been wrong. I probably should have held. But I really would like to sell here. I would like to sell the first reversal up because this is a tight enough channel that the first reversal up should fail and be minor, which means we will evolve into a trading range, worst case, or be a pullback in a bear flag and have more down. I debated whether or not I debated taking off half my position and looking to scale in up here on the second half, and arguably I should have done that, but I didn't want to have to manage it, so I just got out. Okay, here's a low one short. So low one short, second sell climax is here. So probably profit taking down there. Again, this doesn't mean you should be buying. I think the channel's tight, and it's hard to really justify. It's not so simple to buy and make money right here. So I would not be buying. Although we're in a good place to buy. My problem is what I said in the first place, and that is this. This is a fairly strong sell-off, and it's stronger than it appears. And this is the problem with small pullback trends. They just keep going down. So, again, I may have just been trapped out of this trade. My target's down here, and it looks like we're vacuuming down to my target. So I will probably miss out. And that's fine with me. Sorry about my voice, a little slightly under the weather, just kind of allergies. But I really just want to sell pullback, and until I really don't want to sell. Again, we've been trending down for well over 20 bars. I really don't want to sell at these support Okay, so decent breakout, but bad follow through, possible second leg trap, and we're in this entire. Look where we are in the dollar yen on this range. So not a great place to be short. Quickly scrolling through some other markets. Here's the dollar franc. The dollars. Which is the dollar Swiss franc. Tight trading range. Not really a lot going on. Maybe starting some sort of decent rally. Euro dollar looks like it's starting to sell off. So starting to pick up a little bit. And this arguably may be the start of the U.S. session somewhere over here. So, which is nice, which is good. I'm going to take a look at things like Apple. I actually like trading. I think Apple's a fascinating market. It's a great, so kind of a different on a different tangent here. In terms of starting out with most people trading. Again, sorry for my voice. In terms of starting out, most people are best. They're going to be better off with forex than anything else, and the reason for that is commission. So most people, when they're starting out, if you're trading stocks, you need 25,000 in an account, and you're going to get hurt by most brokers if you don't. You'll be penalized. Yep. Well, here we go. Sorry. Uh, so 1 second. So again, I made a mistake by getting out, but I want to see. Here's a strong bar. I need follow through. So strong breakout, strong follow through. I'm looking at a 1 minute chart. I need to see. This looks like some sort of report. Trying to break below these lows. I need to see decent bull bars. So is this exhaustion? Is this, my problem is yes, tight channel. And I need to see what will this bar look like. I think it was a surprise, so I think we're going to go down a little bit more. So I fumbled my trade somewhat, which is okay. I actually got short again, but I'll be very quick to exit if this does not do what I want. That, yes, probably exhaustion, but that was kind of I wasn't expecting that, if that makes sense. Okay, so what can the Bears do? So far, we're trying to close below all these lows, which is good for the Bears. Can the Bears close below all of these bars? You know, in particular, can they close below this low? Again, by the way, going back to my comment about Forex, this is a great example of why I think most traders should start out with Forex. Is you saw, at least I hope you did, how fast some of these bars moved. This bar happened very quickly, and I messed up my order, but I was actually looking at a 1 minute chart, and I saw the breakout, and I wanted to see a follow through bar, and I was a little slow, and got filled down here, which is it's okay, but and my stop is up here. But one of the great things about forex is you could risk a dollar if you really wanted to with some brokers. Now, obviously, most people are going to risk more than a dollar, but you get the point. It's very easy to structure your risk. And one of the nice things is, I get charged in terms of commission per 1,000 units I trade. So, in other words, every 1 second. One thing to note, I'm still having to manage my trade here. One thing to note, we're at the lows of many, many bars. So that is a concern for me being short right now. But regardless, it's a concern for me being short. Here is the low on the 60-minute chart, which you can see is right here. I'll make it blue. Regardless, I think we'll get a second leg down. So, yeah, I feel okay about it. Anyways, one thing I was saying about Forex is it's nice because, to give you an example, I quickly sold. I did not realize the stop was further than I thought it was, and I anticipated accidentally selling with the stop here. And I did not want to risk what I was risking by putting my stop up here. So what I did was I was confident we'd go a little lower. So once we went down here, I bought back, a third of my position, so I could proper. Sorry, I'm looking at the wrong screen. Anyways, I ended up selling and thinking it was 20 pips risk, if you will, and put on a position that had a stop appropriate for 20 pips. Well, that put my stop here, and when I realized that I put my stop in the wrong place. So one of the nice things about forex is, again, when price I got filled somewhere over here, when price went down a little bit, I quickly bought back 1/3 of my position so I could put my stop up here. Now, if you're starting out in stocks and you make that mistake, I think the commission, minimum commission is a dollar per 100 shares. So if you want to trade, and that's easily for a lot of markets, that can easily be $30 or $40 risk. So if you don't want to risk that, you want to risk, let's say, 20 shares a trade starting out, you can easily get punished in terms of commission and spend way too much money on commission, in my opinion. And there's the problem with taking profits in a with stocks, and I say that because every time you exit, you get charged a dollar per entry and per exit, minimum a dollar per 100 shares, at least with TradeStation. With forex, you get charged. I think for me, I think it's, I don't know, 4 or 5 cents per 1,000 units. I don't mean a million units. I mean, obviously, just one standard unit of 1,000. So I think there's just forex. All right, so micro double bottom. This is, again, we closed slightly above it, but looks like on the 60-minute chart we closed right at the low. Makes me think we'll go a little bit lower. The big question here, at least on the 60-minute chart, is what can the Bears do? Can the Bears do what they need to do and get followed through? Can they close way down here? So we're trying to break out. What will the follow through look like? So far, decent looking breakout, but we're not. We have 3 consecutive bear bars, but they're not closing on their lows. Well, again, I keep looking at my other chart. These are closing on their lows. This is a strong breakout. And 5-minute chart, this is what I was referring to. But again, the channel's tight. So one thing you got to recognize with Forex, and always remember is, ever since here, how do you make money? How do you make money buying? Breakout, follow through. Okay, bull bar, I'll buy. Well, what do? Do you buy more lower? It's so easy to get trapped. If you buy this low, let's say you buy this low at 907, so seven pips. You buy this low, you scale in at 97, and then you get out, and look what happened. You get trapped. So if you buy this low, and you can scale in during this bar, but it does not let you out of the trade. So you buy, scale in, get trapped. Buy again, scale in, make money. Buy again, scale in. Let's see, 79, 69, and you can't even scale in lower. So this channel is very tight, and I actually, I failed to really put that in consideration more so than I should have. I should have thought more about that, and I failed to do so. And got penalized for it somewhat, but that's okay. I think it's important to have a goal not to lose. Just don't do something stupid. So, anyways, other than that, great recently great range, which just makes Forex fantastic to trade. Going back to the dollar yen. So again, like I said over here, bad follow through, possible second leg trap. We're at kind of some resistance, and we're holding above this low, these lows, deep pullback. So not that strong of a breakout. Good bull bar, weak dojis. I'm sorry, good bear bar, weak dojis. Good bear bar, bad follow through. Here, micro double bottom. A lot of bulls sold this close, tried to get out on this bar. We rallied up. So, again, for most people starting out, they certainly should not be trading futures. Stocks are great. Let me look at Apple. I'll look at the spider. It's more kind of relevant to what we've been talking about. So again, just looking at over here. These bars, by the way, are huge. 4 bear bars you can sell for a measured move down. And another note with bar sizes. Here's the E-mini. This bar right here, it's really fascinating. But this bar's 40 points. That's $2,000 a contract risk. Obviously, most people can't risk that. And I know I'm kind of being random here. This video is not really to, I'm trading while discussing this video, so I'm more or less just kind of sharing thoughts. not, this is going to be more so a random video. I'll work on making more videos in the future and trying to discuss topics. But I just wanted to get in the habit of videos. Kind of helps me think, sharing my thoughts out loud. So, okay. Great British Pound, 60-minute lows, again, which is over here. So far, we are getting good follow through on the way down. Another bear close. Now we have a 1, 2, 3, 4, 5 bar micro channel, so have to think about maybe a measure move down. Again, this is a sell-off late in a trend, starting back over here. However, bear breakout, follow through, and the context is good. We're trying to break below the lows of many bars. So this may trap bears, this may trap bulls into a bad trade. So another two things to note. I need to figure out how to better organize my workspaces here. So anyways, two things. One is here's below. Obviously, I'm hopeful that we close strongly below it, but I certainly won't be surprised if we do not. So what's some signs of strength? Well, the high of this bar is 36. The close of this bar is 35. So we only went a pip above this close and immediately sold off. Second leg trap, leg one pullback, strong second leg. So you have to think we may get some sort of measured move down of these bull bars, which would take you off the chart. Well, somewhere down here. I don't think we'll get that. Maybe we get, ultimately, I think it's reasonable we'll get that. I don't know if we'll get it today. But so here's leg one, pull back leg two. We certainly may get that. But no one knows right now. Again, I'm gonna pause this video pretty frequently, and I really would like to actually discuss what I do with this trade. Again, I'm short, but I'm aware of where we are. I'm taking a chance that we break below. So, anyways, I may pause this video, but I'll resume it to talk about what I'm doing with this trade. All right, good bull bar, but ask yourself, do you really want to buy above this bar after this many bear bars in a row? Probably not. So this bull bar is not as strong as you think it is. It is a very low probability trade, and I think traders will get stopped out. So, I would not be buying. So here's a 1-to-1 risk reward. Just ask yourself, what's more likely? Do we get above here, or which one will we do first? Will we go above here or go down to here? I personally think we'll go down to here. At least probably think that. But again, that bull bar I just showed you right here, this is the impact it's having on the 6-minute chart. So traders are deciding, are we going to close strongly below? Are we going to get a bear bar closing on its low? Or are we going to get something that's confusing, such as a doji like this? No one knows yet. I have to say though, I am disappointed by this bull bar closing on its high. And I think in this blue line, it's an obvious target. So we may go sideways around here. Another thing to point out is that a lot of traders probably bought the low right here, which is on the 60-minute chart. And if you notice, a lot of traders will buy, they'll scale in, and they're trying to get out at their original entry, regardless of whether or not they scaled in. I think a lot of the traders who did that, they realized they probably made a mistake buying the low, this blue line, which is the 60-minute low over here. They realized it was a mistake, so what they did is they set their profit take, their limit order to buy back to sell out of their long. They set it a couple pips below this low. So I want to actually see about that. Oops, here's a 60-minute chart. This low is 34, really basically 35, and this high was 34 even. So basically a pip away. You'll have some traders who will look to buy back some shorts at this low. I actually added to my position at the close of this bar, and I'm going to take it off. And I'm probably going to sell out of that second position at the low of this bar. Just kind of a quick scalp for 20 pips. I still have my original position, and I'm going to hold it, and I want to see what happens. I want to see what we get in terms of the 60-minute chart. Um, so I say that it really depends. Depends on what we do on the 5-minute, of course. So 120-minute chart, strong breakout. Probably the first reversal up will fail. And one problem I have is today's a Friday, and I really don't like to hold over the weekend. So I suspect I'm going to be more inclined to take my profits or just simply not hold as long and scalp more. I don't like that. I'll think about it over the weekend too much. So I don't want to do that. So here's kind of one thing I want to point out. It looks easy. Buy this low, scalp out. But you got to understand, buying down here, and this is the euro dollar. If you buy, your entries were around 33, so 22, 33. Price has to go up to 22.43, which is all the way up here. So that is the channel down's pretty tight. So it's difficult. It's more difficult than it appears to make money buying. Now, I do think, genuinely, if someone buys and scales in, they'll make money. It's just, again, even if you bought here, scaled in, price doesn't come back, it's difficult. All right, I'm out of my second add-on position. I just got filled out of it. See what other markets are doing real quick. And a lot of times, I said earlier, a lot of times I like to just have some macros set up these buttons where I can just click on some of the forex markets I like to watch. And really, when I'm clicking on them, I'm more or less glancing to see if there's been a surge in movement. So, here's kind of the U.S. session opening. So 50-50 chance on the open, you get an opening reversal. So full breakout, 50 maybe, we're trying to reverse right here. Uh, so here, this is the dollar Swiss franc. What do traders do? Do traders sell, betting that we reverse the market? Well, that's not that simple because of the issue. What do traders? We're holding below these lows, so this may be a 50% pullback. So I would not be inclined to uh, sell to go short. Maybe if the bar closes down here, maybe, but I'm not going to do that. All right, so here we have a low one short. It is consecutive sell climaxes. It's a tight channel. So chance for profit taking. But again, this is what it looks like on the higher time frames. So don't be fooled into thinking that we're due for a correction for a 10 bars 2 legs and look to buy. I think it's very, very difficult to structure longs when the market looks like this. And it just goes into the saying that the market can stay irrational longer than you can stay solvent. So I would not be buying this market, the Great British Pound versus the dollar. I would only be selling. But again, if you're selling, stop maybe up here. We could easily get a pullback and then retest the lows. Okay, so second entry buy. But ask yourself, do you really want to buy above that? Probably not. So another thing to note, bulls sold this close, disappointed by this bar. I'm sorry, bears sold this close right here, this bear bar. They were disappointed by this bull bar, but it was very easy for them to get out of that close, which tells me that there's not a lot of trap traders. Why are the bears are not panicking out of shorts, which makes me think we're going to go a little bit lower. Bulls, they're trying to obviously defend their stop. Some bulls, they'll take a chance. They'll buy this low. I'm sorry, they'll buy this bar, stop down here, betting on the low of the day. Again, it's not an unreasonable thing to do. It's not. It's reasonable to buy here. You buy right now, betting that we revert, just get a strong reversal before the hour closes. Uh, Again, I would not do that. By the way, euro versus the dollar. I said a few minutes ago, bulls would buy. They bought, and they maybe they made a profit. So 331. If you bought this exact low, you did make a profit of 10 pips. So again, decent sell off, but look to the left. It's just not really. It's failed breakout below these lows, so maybe a couple legs up. You know, one of the problems with small pullback trends is you see all this and you keep getting all these reversal attempts, reversal attempts, and they're really profit taking. And just look, if you keep seeing that and keep having trouble with, oh my gosh, the market's reversing, look right here. Do you want to, so yeah, here's, been going down 10, 20 bars, best looking bear bars. Well, do you want to sell, do you want to buy right here? I don't. I understand that we're low in the range, but we're closing below many, many bars. So that makes me think we're going to go lower. So just ask yourself, which would you rather do? Would you rather buy? So try to alter the scaling here. Would you rather sell at the market, put your stop up here, target down here, or would you rather buy at the market, put your protective stop down here, set a target up here? No, I'd rather buy. I'd rather sell. This is just, this channel is, it's too tight for me to buy. All right. Well, unfortunately, I have some things I need to get done, so I will not be able to. I will not be able to finish this video. I will try to remember to post in the comments of this video what I did with the trade management after this, but you know, so we'll see. Thanks for watching.